So, Joe, I'm coming to you first. So you have an idea of what's going to happen today. This move in the 2-year to 4% for the first time since '07. Stocks hanging in. What's the message there?
Yeah, stocks are hanging in, but I can't remember a time since the great financial crisis when the bond market has been so important as an indicator of where equities ultimately going to go. Now, if you've got that 2-year after the Federal Reserve statement today and press conference, and it's pricing above 4%, that's going to act as a headwind for equities to ultimately have a rally. I think the 2-year, without question, is going to be the leading indicator. I think the press conference today, as Steve spoke about, is critical. Is the chairman going to maintain the same disposition of a very hawkish, terse statement that's going to be released before that? If there's any degree of flexibility, if there's any degree of comfort, if there's any degree of leaning towards that the terminal rate's going to be 4 to 4.25%, Scott, the market isn't positioned for that, and that's where you're going to get the rally. The market right now is overwhelmingly positioned bearishly. It's reflected in all of the CFTC data, which shows that holdings of S&P futures are at their most bearish level since '08, since '11, and since 2015. And you know what happened in each of those three instances. So the press conference, to me, absolutely going to be critical.
Unless, Bryn, you think the market's getting a little too aggressive, right? We just talked to Leishman, 453 in April of 2023. Maybe he says they go 100 more this year, and then, in his words, you know, look around, stop and look around. How do you see things heading into the meeting a couple hours' time?
Two things. First of all, on the 2-year, if investors want to tell, going back for a very long time, when the 2-year not only stops rising but starts falling, and usually around 50 basis points, that has been a very, very good indication of where the terminal rate and the Fed funds rate will be. So right now we're going in the wrong direction, but watch for that over the next 3 to 6 months. I think that what Steve said with his three H's are spot on. I think the bias after the Fed speaks today is actually to the upside. I do agree with Joe. There's so much negativity right now. And so I'm not even remotely calling for some long-term rally. But I don't know how much more hawkish Powell could get besides already using words like pain. And so I think if he just continues with the same narrative, I don't think it will be any surprise, and I do think you could have a relief if he doesn't go even more hawkish than his pain trade. So I think there's a little bit of a bias after he speaks to the upside later on today.
Yeah, it's like you wrote the headline of the Wolf Research note today, Bryn, because that's what they're talking about. Our sense is that the markets could be set up for a short-lived relief rally if the Fed hikes by 75 and Powell doesn't ratchet up his hawkish rhetoric even further. Jason Snipe, your expectations here?
Yeah, absolutely, Scott. I think, for me, it's all about the rhetoric. Joe just mentioned that. I think the commentary is going to be key. Obviously, the 75 basis point move is priced into the market. I think, and the other piece is higher for longer. How long? How high? Obviously, what will the terminal rate be? Anywhere between 4.25 and 4.5 is obviously starting to get priced into the market. So for me, the market's going to be hanging on to every word that comes out in the presser today. And I think I agree with Bryn. I think there might be a bias to the upside, but I think he's going to be terse, brief, and get right to the point because credibility still remains on the line.
Yeah. Sarat, do you think we're set up for some sort of relief rally once we get today out of the way? The danger, of course, is that the chair is more hawkish than we're prepared to hear.
That is a true danger. And especially, I think, to Jason's point, the credibility here is really at stake. So we've had a little wishy-washy before this. The last one was very strong. I think he continues. I think he continues to be strong. And the question is, how strong is he going to be? And if he maintains the same, tone that he did last time, yes, you get a little bit of relief rally. But if he says, we go 100 points and we don't know when we're going to stop and we don't know where the destination is, I think the market sells off because they're really sticking to their guns.
Well, I mean, it's hard for him, though, Sarat, to be that specific. He's going to say we're doing our 75 today. That's what we think anyway. I'm not going to make the call until we hear it ourselves. But he's going to likely suggest that they're going to be data dependent. and they're going to have to see what the inflation numbers look like, even though it's a lag, right? Looking at the CPI, as some have pointed out, is looking backwards rather than forward, but at least perhaps gives an idea of where the trend is going. The danger as well for investors like all of you, and Sarat, I'll throw it back to you, is wanting, needing, hoping, and expecting more specificity and not getting it.
Yeah, no, you're absolutely right. And you know, we all want that so that we can actually understand kind of where we're going to go. But he's not going to give it to us because they don't really know yet. And they don't want to, you know, get stuck into a box, because once they do that, then, you know, everybody's going to be hanging on every word. So I think they'll be terse and they'll be vague, and we'll kind of have to just keep on waiting for more data to come in.